Two groups of traders use the exact same MACD indicator yet end up with drastically different results. One group holds trend-following positions and locks in sustained bullish swings, while the other stays trapped in losing trades and suffers massive account drawdown. Statistical data shows roughly 8 out of 10 retail traders end up losing money. Today we will break down the core reasons behind this massive performance gap using live chart visuals. What you see here is a standard bullish MACD golden cross above the zero line. If you only spot this single signal, would you jump into a long trade right away? If your answer is yes, your understanding of MACD only scratches the surface. In this lesson, I will walk you through 3 institutional-grade high-probability MACD standard patterns. The first high-probability structure, Buddha Hand Uplift pattern. I will lay out the rigid, unalterable structural validation rules for this pattern.
Stage 1. The indicator forms an initial bullish golden cross below the zero line. Afterwards, the fast DA line and slow DA line rally in tandem and move fully above the zero exit zone. The fast DF line pulls back slightly but always holds above the slow DA line without breaking down effectively. Once DF turns upward again, the pattern receives full validation. Before diving deep into the patterns, let's standardize the basic MACD components for beginners. I will break down every visual element of the indicator step by step.
The complete MACD consists of core visual components. Well, first, the MACD line, which is the difference between two moving averages. Third, the signal note line, which visually line charts the context for all MACD analysis.
The horizontal middle dividing line is known as the zero axis. When the indicator trades above zero, bullish market momentum dominates. Below zero, bearish pressure takes control. Component 2, MACD red and green momentum histograms. Component 3, the blue diffs line, universally called the fast momentum line among traders. Component 4, the yellow DEA slow smooth signal line. All core buy and sell trading signals originate from crossovers between the fast and slow lines. When the fast line crosses upward through the slow line, we call it a bullish golden cross. When the fast line breaks downward through the slow line, it forms a bearish death cross. Golden cross above zero. Bullish crossover formed above the zero axis dividing line. Death cross below zero. Bearish crossover formed beneath the zero axis dividing line. Manually identifying crossover signals wastes time. You may use a customized MACD indicator script. Inside your trading platform's indicator settings, import the accompanying code to auto-mark all signals. Erase the platform's default MACD code and replace it with the script we provide. The chart will objectively label every golden cross and death cross automatically, eliminating manual visual judgment. Now that we have covered foundational terminology, let's return to the Buddha Hand Uplift pattern. We will verify entry conditions by checking every structural rule one by one. Full standard pattern sequence. First, a bullish golden cross forms below the zero line. Afterwards, DF and DEA rally and hold steady above the zero-axis dividing line. The fast DF line only pulls back slightly toward the slow DA line without any material breakdown. This retracement represents institutional capital shaking out retail holders, not a trend reversal signal. Once DF stabilizes and turns bullish again, upward momentum resumes. This pullback is controlled short-term profit-taking by large institutional capital. MACD values are calculated using 12-period and 26-period exponential moving averages. Only consistent positive bullish momentum can sustain the indicator trading above the zero axis. Never rush to open positions the second the indicator crosses above zero. You must wait for price to retrace and confirm support before establishing long orders. You satisfy entry criteria if either validation rule holds. Price pulls back without breaking the DEA slow line, or the retracement never crashes through the zero-axis support level. Simplified validation minicom for Buddha Hand Uplift. Golden cross forms at lows, indicator moves above zero, pullback bounces off support, low-risk long entry window. Backtesting across tens of thousands of historical charts confirms. On 15-minute and higher time frames, this pattern delivers far more stable signal reliability. Live market validation confirms sub-zero golden cross launch and post-breakout pullback above DEA as core pattern confirmation. DF reversal opens high-risk refort entry window. Enter on reversal bull candle once volume and price support align. Place limit take profit orders at Fibonacci levels. Stop loss below swing low. Strictly adhere to 1B2 risk-reward rules. We only trade corrective longs in established uptrends. Finishing Buddha Hand Uplift, we move to Duckling Surfing Water bottom returnal pattern. All 4 rules are mandatory.
No sub-zero mandatory. Successive sub-zero crosses signal full bearish momentum exhaustion and bottom formation.
Heavy volume bear candies shake week longs. The price takes a violent shake for a moment before V-bottom rally. This setup offers reliable swing bottom reversal confirmation. Shrinking bear histograms do not guarantee a bottom. Bottom hunting carries high loss odds. Professionals wait for confirmed pullbacks. Enter long at 50% fib retraction bull candle post-bottom confirmation with structured stops targeted to eliminate unnecessary losses. Concluding Duckling Surfing Water rules, our final institutional pattern, Azure Cloud Wander, for mid-rally consolidation trend continuation. All three institutional patterns covered. Isolated golden/death crosses have minimal value. The true edge lies in institutional capital flow and market cycle interpretation. Bear in mind, MACD is no holy grail with guaranteed wins. It only improves statistic win rates based on historical price data and cannot eliminate losing trades entirely. Consistent long-term profitability relies on three core trading principles. Be patient for verified high-probability signals. Enforce stop-loss without emotion. Trade with and control greed and fear. Respect market structure to earn compound returns. I am Trade Wolf. Thank you for watching. Advanced frameworks will be covered in our next episode.